No tax on tips. Is it a tip or a service charge? Federal tax law changes that introduced the concept of no tax on tips allows many service workers to claim a deduction of up to $25,000 on qualified tips. Yet, as with any tax relief that is provided by the federal government, it is highly specific, and the most particular aspect is that be not any tip, but qualified tips. This in turn requires that you understand that the IRS distinguishes between a tip and a service charge based on the degree of customer choice. A payment is legally considered a tip only if it is entirely voluntary. The customer has the unrestricted right to determine the amount, the payment is not dictated by employer policy, and the customer decides who receives it. In contrast, any mandatory amount added to a bill, such as an automatic 18% gratuity for large parties, banquet fees, or hotel room service charges, is classified as a service charge, even though most people might consider it to be a tip. Because service charges are technically part of the business's gross receipts, they are treated as regular wages and do not qualify for the no tax on tips deduction. The most common mistake made by both employees and employers is the misclassification of automatic gratuities as qualified tips. Many workers mistakenly believe that as long as the money is labeled a gratuity on a receipt, it is eligible for the tax-free deduction. However, the IRS maintains that if a customer cannot modify or remove the charge without consequence, it is a service charge. Another frequent error involves the $25,000 cap and the phase-out rules. Taxpayers often forget that this deduction begins to diminish once their modified adjusted gross income exceeds $150,000 or $300,000 for joint filers. Additionally, self-employed individuals sometimes fail to realize that their deduction cannot exceed the net income of the specific business where the tips were earned. The implications of these mistakes can be financially draining and legally complex for all parties involved. If an employee incorrectly claims a service charge as a qualified tip, they may be hit with back taxes, interest, and accuracy-related penalties once the IRS reconciles the return against the employer's W-2 form. For employers, the stakes are even higher. Misclassifying service charges as tips to help employees get the deduction can lead to audits for unpaid Social Security and Medicare taxes. This can result in a business being held liable for 100% of the unpaid employer share of taxes, as well as significant fines for filing incorrect information returns. In extreme cases where the IRS determines the misclassification was a willful attempt to evade taxes, criminal charges or jail time can be pursued. To avoid these pitfalls, precision in record-keeping and a clear understanding of the Treasury tipped occupation codes are essential. Employers should use the 2026 version of Form W-2, which requires them to separately report qualified tips in Box 12 with code TP and the specific occupation code in Box 14B. Employees must diligently track their daily tips using a log or app to ensure the amount they claim matches what is reported by their employer, as discrepancies are a primary trigger for audits. It is also wise for businesses to clearly state on receipts that automatic charges are mandatory service charges rather than tips, or conversely, to make them truly voluntary, giving the customer the express option to modify the amount if they wish for those funds to qualify for the deduction. Continuous education on the evolving 2026 tax standards is the best defense against accidental non-compliance. Since the no tax on tips provision is currently scheduled to expire on December 31, 2028, taxpayers must stay alert to further IRS notices or potential legislative changes that could alter the deduction limits. Working with a tax professional who understands the nuances of this particular tax legislation can help verify that an individual's specific occupation, whether in food service, hospitality, or personal appearance, is on the officially recognized list of eligible trades. By treating the distinction between voluntary tips and mandatory charges with the same rigor as any other financial data, workers can safely maximize their take-home pay while staying on the right side of the law. We welcome you to subscribe to our YouTube channel for more informative videos on taxes, finances, and investments. Thank you.